Everyone, this is Dale Anderson from Fabrik Invest. I hope you're keeping well. So today I just wanted to give you a quick update on the latest Zoopla UK rental market report, which is powered by HomeTrack, which analyzes data across the market. So this was recently published in December 2022. And what it's showing, just as a summary, rental inflation is up by 12.1% in the past year. There's no sign of a slowdown due to a chronic supply-demand mismatch. So there's an undersupply of good quality rental accommodation. There's also demand is seen at 46% above average, while total supply is 38% lower. Rents in the largest UK cities are registering the fastest growth rates. Rental affordability for a single earner is at its highest for over a decade. Demand for one-bed flats has jumped the most as renters seek better value for money. Stretched rental affordability will start to hit demand, and the pace of rent increases in Q1 2023, and rent growth to slow to 4 to 5% by the end of 2023. So whilst the Bank of England has increased the interest rates and the housing market is cooling off, there is talk of a potential correction and prices going down. In some cases, we are actually seeing rental inflation and rental values going up. So I just wanted to quickly share the screen in the report with you. As you can see, plus 12.1% annual change. There's also a 35% rent of earnings per person, per household. So rental affordability is going up. And there's 4 to 5% rental inflation expected over 2023. So if we take a look here, there is a widening supply-demand imbalance drives rents higher. As you can see in this chart, rental demand versus 5-year average, stock of homes for rent versus 5-year average, and then flow of supply of new homes versus a 5-year average against the rental growth expected. According to Richard Donnell, the executive director, increasing investment in a new rental supply from multiple sources is the main route to reducing rental growth and making for a more sustainable private rented sector. Goes on to say that there has been less than minus 38% stock of homes to rent versus the 5-year average. So there is a chronic supply-demand imbalance. The rental market continues to face chronic imbalance between supply and demand. Demand side pressures are being exaggerated by rising mortgage rates, limiting access to home ownership for the first-time buyers. Rental inquiries per estate agency branch are 46% above the 5-year average. There's been a modest increase in rental supply in recent weeks as the sale market weakens. The average number of homes for rent per estate agency branch is 10, up from a low of 7 at the end of September. However, the stock of homes for rent remains 38% below the 5-year average and 4% below November 2021. So no sign of rent inflation slowing in the short term. Rising demand, lack of supply means rents are increasing quickly, up 12.1% over the last 12 months to October 2022. This is an increase of £117 per month or £1,400 a year. The underlying data shows no sign of any immediate slowdown, with rental inflation in the 3 months to October 2022 being the highest quarterly gain since December 2021. So it's important to draw a distinction between the rental inflation for new lettings when the property becomes vacant and its rent is adjusted in line with the market, and rental inflation for all private rental homes. 1 in 4 renters move homes each year, and this group will experience rental inflation in line with new lettings. So for the 75% of renters that do not move each year, rental increases are much lower at 3.8% in the year to October 2022. Slower than the growth in the average earnings. The chart compares the rental inflation, as you can see below, for new lettings versus all private rented homes, based on the Office of National Statistics Index of Private Housing Rental Prices. This variance is while more renters are staying put to avoid higher rental payments when they move, and further compounding supply problems. As you can see here, rents on new lets rise faster than existing tenancies. The Office of National Statistics in the light purple, or private rented homes, and then Zoopla new lets in the second bar there across the different locations. So you can see London, UK, Northwest, Wales, Scotland, and then the percentage growth year on year. So big cities register the highest levels of rental inflation. We are seeing rents go up in the bigger cities such as London, Liverpool, Manchester, Leeds, Sheffield. Rents are increasing faster in the larger cities. Rents are up 17% or £273 per month over the last 12 months. Our index is recording above average rental inflation in other big regional cities, including Manchester, plus 15.6%, Birmingham, plus 12.3%, Glasgow plus 14%, Bristol plus 12.9%, and Sheffield increases of plus 12.4%. These cities are seeing a surge in demand, which is exceeding supply over the last year. Properties are getting fully occupied. It's been a major employment centers with large student populations in particular, which are experiencing this inflation. Not all cities are registering rapid gains, such as smaller towns and cities like Hull, York, Oxford, and Leicester recording much slower growth than the other cities. So as you can see, rent inflation running well ahead of the 5-year average, and the different areas and cities, as you can see, mainly cities that we focus on, such as Manchester, Liverpool, Sheffield, rents are in fact going up, as well as London, although yields in London are typically a lot lower. So we are seeing higher demand in cities such as Manchester and Birmingham. The key question is, when will rental inflation start to slow to more sustainable levels? The current momentum in rental levels is a growing concern for all private renters, especially of those on low incomes, as it exaggerates cost of living pressures. Rental inflation will only slow if demand weakens or supply increases significantly, or if we see a combination of one of the two. Now, obviously, there is actually less supply coming to the market because of the current market conditions, and that's also a factor that is driving up the rental demand and rental inflation. So there's a structural undersupply of private rented homes. The quickest way to slow rental inflation is to boost rental supply. Unfortunately, we do not expect any major improvements over the next 12 months. So that's not something that's going to change with the current conditions of the housing market and inflation on build costs. The stock of homes for rent has not grown in size since 2016, holding steady at 5.5 million homes over the last 7 years. We have seen private landlords rationalizing their portfolios, selling some assets in the face of high taxes and facing greater regulation, which is actually putting landlords off in some cases, while some have taken advantage of strong sales markets. So this reduction in rented homes has been offset by new investment from cash flow, focused private landlords and corporate investors delivering build-to-rent schemes. So that's something we're certainly seeing growing interest in, and various assets, alternative assets like student accommodation or smaller studio and one-bedroom apartments for the young professionals in the cities. So number of private rented homes in Britain remains flat, as you can see by the chart here. Buy-to-let mortgages launched in 1998, and steadily, as you can see, this chart growing year on year, according to Zoopla research. Higher mortgage rates have shifted the economics of buy-to-let investing, limiting new purchase volumes, which could add to rental supply. Proposed regulations and new rules on renting homes that are not as energy efficient rating of C or better from 2025 are likely to result in more private landlords selling up homes that are expensive to manage and retrofit. This will offset the impact of new investments. We do, however, expect some modest improvements in rental supply as the sales market weakens. Landlords looking to sell homes may now continue to rent them out while uncertainty in the wider sales market lasts. Possibly a lot of landlords will just retain their property, keep renting them out until they see a market correction. So rental supply will increase, but not sufficiently to drive a material slowdown in the rental inflation in isolation. Rent unaffordability to hit demand and growth rates. While rental demand increases in time of economic uncertainty, the affordability of renting is set to have the greatest influence on how much rental inflation can slow down over 2023. Rent tends to track earnings over the long run, and therefore rental inflation in line with earnings is sustainable. While earnings growth has accelerated, rental growth has been outpacing earnings for over a year. If rental growth were to continue to run at 12% over 2023, the proportion of earnings needed to pay rent will be stretched even further higher to 37% of earnings. So this is not likely or viable, and we expect the growing unaffordability of renting to hit spending power. This trend, supported by modest improvements in available supply, could lead to rental growth slowing to 5% over 2023. So as you can see by this chart, rental affordability for a single earner. So you've got rental growth at the current rate, 12%, 37.4%, and then 5% rental growth. October 2022, 34.9%. So affordability playing a big factor, and that will probably drive a lot of people to properties which might be a bit smaller or an apartment instead of a house. So renters are being forced to look for smaller homes or shared homes. Faced with growing affordability pressures, renters have several options. One is to share to help spread the cost of renting for single-person households and low earners in the UK. The latest English housing survey shows that there's an equal 50-50 split between private renters with multiple incomes, couples or multi-person homes, and single earners, single person or lone parents. We expect more sharing in the face of high rents and particular squeeze on single earner households. So multi-family homes, house of multiple occupiers, smaller studios, one bed, student accommodation is definitely where we're going to be seeing some very good rental returns for yield-driven cash-based assets. Recent research from the Resolution Foundation found that there's been a steady increase in sharing measured by space per private renter, which has decreased by 16% over the last 2 decades. So more sharing will support underlying rental growth in the short term, but this impact will start to slow down in markets where this option is believed fully utilized. So another option for young single people faced with high rental costs is to stay at home with parents or relatives. Office of National Statistics data shows a continued increase in the number of young adults aged 20 to 34 staying at home is 3.6 million in 2021. Rather than incurring rental payments to live independently, this trend is already helping to ease some of the current demand side pressures. Finally, renters could downtrade to smaller homes. Our latest report highlighted how renters are seeking smaller homes with an increase in demand for 1 and 2 bedroom flats and a reduction in demand for houses. Our latest data shows this trend is continuing with an acceleration in demand for 1-bed flats, which now accounts for 32% of rental inquiries and has been seen nationally. The affordability dynamics for a couple renting a 1-bed flat are much better than a 2-bed home and keeping a spare room or subletting. So again, onto the chart here, UK rental inflation, 4 to 5% growth in 2023, a jump in demand for apartments and flats, as you can see by the chart here. The difference between the light purple and the darker purple section, where there's a growing demand for the smaller properties. Outlook, the private rental market is an important housing tenure and plays a key role in the operation of the UK housing market. It provides flexibility for those who are unable to or unwilling to buy. It's particularly significant tenure for younger households and supports the labour market flexibility. It is also increasingly important for older households in middle age and later in life. A prolonged period of lower net new investments in rental homes, together with a rationalization of landlord portfolios, has seen the growth in rental supply stall over recent years. Increasing demand is pushing rents higher and adding to affordability pressures for renters. This means more renters are having to consider a greater set of compromises when looking to buy a home. Policymakers need to better understand the rental market, as well as the forces and factors shaping the overall availability of supply. The demand for rented homes is only going to rise in the medium term, so it's important we encourage more supply from all forms of landlords, whether private individuals or large corporations. It's important that policymakers encourage good landlords for all types and sizes to stay in the market, deliver much needed supply. So very important for the buy-to-let market that government policy does support landlords, because we basically are investing and helping people and renters with supply of new homes, which will maintain rental inflation at a reasonable level. Only by increasing investment in the private rented sector can we ease the affordability pressures on renters in the medium term and make for a more sustainable rental market. So these are the rental highlights across the country. As you can see the map here, Manchester's seen the highest growth. We've seen this across our portfolio with our investors, and rentals prices are actually going up on some of our newly completed developments, where we originally quoted £100 less than what they're able to charge now per month. In places such as Manchester, Bristol, Birmingham, Edinburgh, Cardiff, Nottingham, Leeds, Sheffield, Liverpool, all at the top of the inflation chart. A lot of people will be what's called semigrating, so probably leaving London, realizing they have flexibility to work remotely, and they can get more for their buck or more for their money up in the northwest or the northeast or the Midlands, Wales, other areas of the UK. So rental market snapshot, October 2022. Again, here's just a chart showing the year-on-year change in the different areas. So if you found this useful, if you want to get a copy of the report and kept up to date with the latest market news, please do register and subscribe to my YouTube channel. Thanks for your time. Have a great day and a Merry Christmas. All the best.